Yo, what's going on, guys? I want to show you a recap of a trade that I just took on YM right now. This trade was absolutely perfect because the market structure was very clean. It was very distinguishable, easy to see and notice. And the market was just simply forming lower lows, lower highs, and lower lows and lower highs. Now, I want to go over more of this in depth with you guys and show you exactly why I took this trade, but it's very simple. I think one thing that you guys should be looking at is obviously lower time frame bias. I want to be on the 1 minute 30 second. I was on the 1 minute for this trade right here, and it was very clear on what's happening. Now, the thing too, you guys don't need to be trading during a specific session. It's not so much the session that matters. Obviously, it does. You want to be trading when there's volume in the market, but there is volume in the market during every session. Now, I think the big thing, though, the very important thing is distinguishing the setup and making sure it's very clear. It's very easy to understand. That way that you're not getting into trades where a fair value gap or other entry models are not in alignment with that bias. So what I'm looking for is I want to see a very clear trend. First off, right here, we're in a clear downtrend. But one thing that I want you guys to look at is look at not so much this lower low. Now, I want you guys to notice something. When I'm seeing a lower low form, I don't want it to be a massive range like this with very big candles. I want a lower low to be 1, 2, 3, 4, 5, 6 candles like this. And then this lower low is nice with 1, 2, 3, 4, 5, 6 once again. And this is a nice lower low. When I'm looking for a lower low or a higher high, I want one fair value gap to be presented within that extension. The extension is from the high to the low, the higher high or the lower high to the current lower low. And then I want to see price make a lower high and not void or go higher than the previous lower high. Notice on this move right here how there's one fair value gap marked up. I'm going to mark them up for you guys. We have one fair value gap right here. Okay. We have another fair value gap right here. And then we even have a third fair value gap right here. You can see that price did trade into this fair value gap right here. But when I'm looking and seeing an extension, a lower low like this, I don't want to see this. It's too confusing. It's hard to know what fair value gap to go off of. And yeah, you could use the Fibonacci. You could go from the higher or the lower high to the lower low and say, oh, whatever fair value gap is above the 50%, above equilibrium, you could take a trade. But it's just like, it's not what I want to look for. But right here, look at this move. We have this low right here, right? This lower low. Price makes this lower high, and then it makes a new lower low. What justifies this as a new lower low, though, is the candles. You need to look at the bodies. Yeah, we have the wicks right here, but what's really important to look for is how the candles are closing. So we could see that look at this candle right here. Look at the body where it closes. It closed lower than this previous support right here. Notice how this candle closed below this wick right here. That was the previous low on the lower low. Now we have justifiable bias to tell us that price wants to go lower. But we're not going to freaking sell when the candles are bearish like this. I'm going to give you guys a major hack right now. Excuse me. When you guys are trading, you want to be selling when the candles are bullish and buying when the candles are bearish. So what do we see right in this new lower low? We see a fair value gap form. From this first candle's low to the third candle's high, extend into the future, just like that. So price makes a new lower low, lower high, justifiable. We want this lower high to not go higher than this previous lower high right here. Price retrades into the fair value gap. You could have had your stop loss right above this first candle that made the fair value gap. Price would have gotten close, but wouldn't have stopped you out. And then for your previous low or for your take profit, you could have just zoomed out like this. And look at this. We have this previous low right back here that I would aim for. So this low right here, That's my take profit. So I would have entered a short as soon as it hit the bottom of the rectangle, the middle of it, anywhere in this rectangle is a good sell. You can short right here and expect price to go lower. Now you have this low right here. You could have gone for this low right here, this wick. It's really up to you what you guys want to do, how big of a bag you guys are looking for. But for these trades right here, I actually ended up taking two trades right here. So I saw that we had this. We had two fair value gaps. First, I was going for this fair value gap right here. Okay. Notice how the body of this candle, it closed lower than what? Our previous support right here. We can see a candle closure below it right here. Price recharted a lower high into our fair value gap. That's where I sold 5 contracts right here, and then another 5 contracts right here. And I saw that price was going above it. Now, obviously, my stop loss is right here, but as price is going up here, I was like, hold on, look to the left, structurally clues. We had another fair value gap that was created previously, and that's where price retraded into, right in here. And I said, oh shit, you want to go back up in there, buddy? Shorted again 5 more contracts. As it came into here, I now moved my stop loss up to here just to be safe. Then for my take profit, what did I do? Just zoomed out, look to the left, structurally clues. Where did I get my clue? Dude, right here at this previous low, what are you guys talking about? Right here. Extend all the way out. That's where I closed my trade. All 15 contracts on this candle right here. Well, I had it right above here, this low. Actually, that's where I had my take profit, but originally I was aiming for this low right here. And then price within one candle. Look at the length of this candle from 76 all the way down to 72 or 22. 76 to 22 is insane. No, sorry. That's from tripping, guys. All the way from 76, yeah, to 22. I was not tripping. Sorry, guys. Got a little mind fucked right there. But it's as simple as that. But the biggest thing is looking for very, very clear market structure. You guys want to be able to look at the markets and say, dude, I know exactly what is going to happen on this trade right now. I know for a fact. Obviously, use proper risk management. But once you start only taking trades out of seeing this specific setup that I just showed you guys in this model, it's going to be very difficult. You guys need to drop everything that you have been using and just apply this, and you will fucking murder the markets. So that's what I wanted to show you guys. I will see you guys on the next video. Peace out.